this community evening was really born out of the fact that I get a lot of comments from people every weekend that I meet at home opens, and they keep on asking me a lot of similar things. So tonight I wanted to sort of wrap that in some context, and hopefully I can peel back the onion of what's happening in Cottesloe and how that relates to the property market in general. This is where we've sourced all our information from, so and on the basis of that we can make some sort of assumptions. I'm not giving financial advice. All I'm trying to do is give you a market perspective that's backed up with some good data. What we find is Cottesloe has been one of those suburbs that starts to move and show signs of life when the market is starting to improve, and it's one of the first suburbs, if not the first suburb, to do it. And likewise, when the supply of property starts to go up and the number of buyers start to peel away and the market starts to take a backward step, it's usually evident in Cottesloe first. Don't ask me why this is, but we just tend to see evidence first. It's a bit of a bellwether suburb, I guess, is why, well, that's what it's become. It's a suburb that people aspire to, but what's interesting about it, it's a suburb that people can buy in as a first home buyer, or they can buy in as a small family, a larger family, or a retiree. You know, we have a big, we have a divorce market. That's become a thing. And we talk about, there's about 9 different property buying types in Cottesloe, and that's because there's a whole lot of property types. And all of you that have lived here or searched here for a property will know that we've got everything from bed sits here all the way through to some of the finest homes in Western Australia. We've got everything in between, so it's quite a remarkable suburb. And that suburb also brings all different types of people, so it's got this really interesting mix, and everyone has a common theme, and they like the ocean, or they like the fresh air or the salt air, whatever it is, but they're here because of that. They have a common love of the area, but they are from all over, all ages, all stages, and that's a really interesting thing about our market. So you can take a snapshot of, say, if you look at, say, the Dalkeith market. The Dalkeith market has a small amount of retirement housing, very small amount, and everything else is families, large blocks, large houses. Very little in between. You take a walk back, look at Cottesloe, lots of different housing types, and therefore lots of different buyer types, lots of different people, and a really eclectic, functioning community, which is what Cottesloe is. And I think that's why it's a bit of a bellwether suburb. You've got a bit of a conflict with local planning initiatives versus state planning, and I'm going to talk a bit about that tonight because there's always some good things happening around Cottesloe. And I think one of the features of this suburb is that we've had some unaligned goals between state government requirements and then we've had the local community that's been very vocal in what they want and what they perceive. And that's all a good thing, but the two goals are unaligned. So I'll talk a bit about that when we're looking at the future. So the brief insight into Cottesloe, and those of you that have seen me in a home open, you'll probably hear me talk about this quite often. A lot of people come to me and they're looking for a particular property, and they've got all their wants and their needs. And I keep on telling them that the thing about Cottesloe is it's a great disappearing suburb the further south you go. It is an isthmus of land that is wider in the north and goes down to virtually nothing in the south. And when you look at a lot of the other suburbs, what you realise is Cottesloe is actually quite a small suburb. It doesn't have the population or the housing stock of other councils. And so if you look at that by the numbers, what does that mean? Well, we're 7,375 people at the last census. That's not a lot of people living in an area. You've got 3,500 odd private dwellings. You've got a median age of only 42. So that median age has been coming down, and what that tells us is there are more younger people, there are more people moving in to the marketplace. You've had properties stable to trending down after the GFC. That's actually allowed a lot of people to move into Cottesloe, and generally they're of a younger age. The overall growth rate since we kept records is 7.8% compounded. Now, it used to be 10%, so why is it 7.8%? That's because over the last decade, it's been adjusting after a previous decade of prices going up. So, and you know, everyone used to say get into property because it goes up 10% a year. I remember at various stages in my career, everyone used to give that sage bit of advice. Just always seek context. So what impacts our market? I mean, the obvious thing is supply, and we get a good gauge on supply by looking at what people are going to sell their properties in the forthcoming season. So that's the sort of thing that I look at. We look at how many people are attending our home opens. If we've got a good property and we have 29 groups of people turning up on a Saturday, that's a good thing. If we have a property and we put it on the market fresh on a Saturday and nobody turns up, that's not so good. You sort of check your phone and make sure it's on the web. So supply is critical to the market, and Cottesloe is very sensitive to that, probably more sensitive than others because of the size of the suburb. When I talk about government policy, I'm talking both local government and state government policy that affects us in terms of what they're going to do with Up Road or Up Railway or any other marine park along the front. So that affects us. Lending conditions and interest rates. You know, my view at the moment with the way interest rates are, it's pretty much a birthday, but when you think about that, people are now required to have a lot more equity. So it's not so much about interest rates anymore. It's about equity, it's about serviceability. It's about your age now. I mean, I'd hate to go and walk up to the bank at my age now and say, can I have a loan? Because they sort of, you got some 32-year-old genius looking at you and saying, well, you got a fair amount of grey hair there. I'm not going to take a risk on you. And so attitudes have completely changed, and that's interesting. So you have to re-educate them. Unemployment and wage growth. That's also that's interesting on a state basis because we want to see people coming to this state, and we know there's activities and there's an economic cycle, and we will start to see a little old agency based in Cottesloe. We'll start to see people turning up at our office who want to rent something in Cottesloe or the western suburbs. And where are you coming? Oh, eastern states. What have you got? Yeah, I've got a job here. Where's your job? Oh, it's in the oil and gas sector, or I'm coming over here to pick fruit, or maybe not. But I've got a job in the mine expansion up north, or I've got a job as an operator in a mine expansion or a new port facility or whatever. So we get a lot of information, and we think about that, and we see trends that happen before it becomes recognised by government and statisticians. Household consumption, this is an important one. If everyone's house is worth more, they feel more wealthier, they spend more at the shops. You know, or more online these days. So again, when you're looking around the suburbs, you see some centres are struggling, but you see other ones doing quite well. And those ones that have got an online presence are doing very well. Those ones that don't aren't. High Street has been more popular, I think, with tougher economic conditions than, say, someone going into a larger shopping centre. The way we're susceptible to Economic activity. Mining is a given, we all know about that. We look at what's happening, at the state at the moment. We've got the three major iron ore companies all opening up new areas, going new expansion, spending somewhere, $8 to $9 billion. But sitting behind this, you've got a potential for about $42 billion in oil and gas expenditure up north, which is just sitting around with lots of people juxtapositioning themselves at the moment as to whether they're all going to link up their leases off the northwest shelf. So this is it's something that could just break open the state again, and we're going to see a lot more economic activity over and above what is coming online. Our agricultural sector has been doing well. So, and how do I know that? Because we've had farmers returning to Cottesloe saying, well, that off-farm investment I sold 8 years ago, I've always regretted that, and the market over the last 8 years has allowed me to buy back in at a similar price. So I'm now interested in this property. So we now have the farming families coming back to buy off-farm assets back in Cottesloe. And that's real, and we see that because they turn up at our home opens, they turn up at the office, they want to have a chat. Understanding the cycles, which is one of the things was the main theme of this talk. What I've noticed, and I've got to admit I've been in the property market since 1979, and when I was young and raw, I started off and I was a real estate agent. I did my first development in the first 12 months, and I thought, gee, this lark's easy, the market always goes up. But what I've realised over the years is that for each upward cycle in the market, there is a corresponding downward or adjustment cycle. And it's about the same period of time. And what we've seen, and for all of you out here who are similar ages to me, and for all of you that are a little younger, the difference is that we've seen some very short cycles. And those short cycles were that sort of, and I think people used to call it boom bust. I hate the term, but you did get a bit of this 18 months up, 18 months down, 3 years up, 2 years down, 2.5 maybe. And then all of a sudden, we had a longer cycle, bigger than any of us or any of our parents or grandparents could remember. We had a push up in the market from 97 to 2007, huge increase in asset values, and everyone thought, well, that's a great upward cycle. I can't wait till we have another one of those. We'll probably never see another one like it, okay? But a longer cycle is more of a structural change. A shorter cycle is all about economic activity levels at the time. So there's a very big difference between those two things. We've been through a long cycle with structural change. We've come down off the back of that. So that 10-year upswing from 1997 to 2007 has been followed with 2008. The market started to adjust, GFC in 2009, and we were into that long adjustment cycle. We had a bit of a dead cat bounce, which I'll show in one of the slides to come up in a moment. And within these cycles themselves, there are smaller cycles that are affected by elections and banks changing terms of lending. All those sort of things happen, and that will alter the market landscape, and then the market will compensate and adjust. And that's what you're looking at in those little compensation periods. You're looking for a position to either buy or sell. Now, the first thing I'll say is this is a very long, a very big graph that is got spacing on it that makes it look like property goes up all the time. It was probably published by the Reserve Bank and CoreLogic, but I reckon a real estate agent was sitting there and saying, this is a great graph. Property always goes up. This is fantastic. But it's not really the case. And you'll see some blips in there, and there's the first blip you've got there's a first grey line, then there's that second grey line there. In fact, started my career, let's go to the first narrow line. That was the first sort of credit squeeze in the early 80s, because the property market, 80, 81, really got going, and people thought, oh, this buying property is a good thing. And then it sort of fell off a bit of a cliff, and there was a credit squeeze. And then back up, the next blip up, the market ran up, stock market growth, then we had the 87 stock market crash, and what happened after that? The property market actually went up, and that's because people took capital out of stocks, put it into real estate because it was safer, and the property market responded. I remember selling a property by auction in Cottesloe in 1988, February, and everyone was a bit unsure about the market. Put it up for sale, and I had a couple of lawyers and stockbrokers and company people. They were all competing for the same property. We expected to sell for $250, it sold for $350. It was in Pier Street. It was a huge price. But what it did show was that people wanted to be in property because they didn't trust the market anymore. So that was that second blip. Then you see from 98 through there, 97, 98, this long road up, and then another glitch in 2008-9 with the GFC. Another blip up, which was the dead cat bounce in 2010, and that's where people thought, oh, the market's readjusted, it's okay. And I'll tell you, I think in the eastern states, they're just going through a bit of a dead cat bounce at the moment, and then that'll readjust again. And then here we are, we keep on going up, but a lot of that was to do with a lot of capital going into property. So if you buy a block in somewhere for 150,000, you spend 300 on it, you sell it for 450 or 500, and people think, oh, they see 150, then it sells for 500, and they go, oh, the market's gone wild, but they've spent 350,000 building a house. So a lot of that is capital expansion going into the property market, bricks and mortar, people building stuff. And then you'll see here, the market started to turn down again, and that's all about banking, increased equity, little economic uncertainty. But if you put against that big upswing up to 2007, the East Coast property market, it would have swung down and looked a little bit sick. And then if you take the second upward run, and if you put the West Australian market over that, it would have also run out to the side and looked a bit sick. And what it goes to tell you is that the East Coast and the West Coast have always run out of sync. And that's the macro view of the Australian property market. And that sort of large cycle says to me that we are now through a top end of a cycle, and I think there's going to be some further adjustment on the East Coast, and I'm talking about drifting down, and I think there's going to be compensatory action over on the West Coast driven by the normal things that drive our economy. Good agriculture, business confidence rising, the big mining companies doing their thing, and new mines and new operations and new minerals coming into play as well. Perth house prices. I'm coming back to Cottesloe in a moment, but I want you to see that over the last, this last 5 years, what you're seeing is the number of transactions and the median price coming down. So less activity and lower prices. And this is the same for units, but interestingly, it's not the same for land. So we've seen land sales in the last only month and a half, and it'll be interesting to see the last couple of months, but we've actually seen land sales tick up. So that's actually a good sign, and that's also born out of people selling the land, offering great deals, great packages, and people are saying, you know what, this is probably a good time. Interest rates are settled. I've got some confidence here, I can move. And we haven't seen that improvement. I haven't got the land one up, unfortunately, but I just like that stat because it shows that there is some activity in that land purchase. And those land purchases, that means people are going to be building houses. It means that there is a little bit of activity starting to move. And that's what we need to see. So again, going back to those cycles, government policy, interest rates, taxes, population movements, external shocks, enterprise liquidity events, business spending and activity. Now, if I'm going to go bottom up, business spending and activity, the government wants all businesses to go out and be positive and start spending money. I'm not sure that's necessarily going to happen because maybe a lower tax rate would help and less bureaucracy, but you will see some increase in business spending in Western Australia because of what's going on. The enterprise liquidity events, well, we've got an iron ore company that's just handed out a lot of dividends over the last year. We're going to have other companies doing the same thing, and that sort of liquidity does come into the West Australian economy because that company has a lot of shareholders in this state. And it's not the only one. I mean, there are new businesses that have started here. Some of the old businesses are trying to reimagine themselves and reinvent themselves, but there's new businesses coming here. There's new minerals to be developed. There's downstream processing. There's a bit happening here. External shocks, well, you can look at America and China having a bit of a biffo at the moment. So one week they're at each other's throats and the markets are falling, and the next week they're trying to make up and the markets are rising. How does that play out in the property market? It only plays out in terms of people's levels of confidence one week to the next. It's nothing to stop you trying to buy a roof to put over your head. So don't get distracted by short-term shocks like that. There's a far bigger game being played out there, and property is medium, at least, to long term. Population, what we see is, again, we look for people coming from the eastern states. We look at who's arriving, why they're coming here, what jobs they've got, where they're going. It's really, really fantastic information. And when we sit down and speak with our property management team, so we've got 7 property managers in residential, we've got a commercial manager, we've got assistants, and business development people out there. And so we're getting this information about who's arriving. And the others are obvious: taxes, interest rates, government policy, mostly long term, but interest rates, yeah, you've got to say short term. Going into long term now. Again, looking a wider look, and we're going to tag back to Cottesloe in a tick. This big increase, 99 through to 2007, is really obvious there. And then the movement since has been bounding along. But again, you see that 2010 anomaly in the figure. You've seen these prices 2015 and 16. Now I can tell you 17 was lower and 18 was slightly higher. So it's just bumbling, all right? And it's looking for direction. And that's what that is telling us. Getting down to how we work in the property market, halfway down there you'll see forward indicators. The people that are ringing us up asking for advice and appraisals, we monitor that, and that gives us an idea of what the public is thinking. Numbers of people at home opens, you know, are they real buyers or are they just the neighbours from the street? That's important. The calls and inquiries, so which real estate portals are working, how much you're getting through social media as opposed to conventional online. And that's changing. So what we find now is literally 2.5 years ago, 30% of people would be using a phone to access information. Now 62%, and that's 2.5 years. That's a huge increase. There's less people on laptops and less people in the office using a screen, and virtually no one reading the West Australian for a property. We like to also separate activity in housing sales and listings and unit sales and listings. We look at tenancy levels as well, and this all gives us a supply and demand view. The median price of houses in Cottesloe going up, and we've seen the median price of units going down. So those two types of property are not acting in the same way. So what's going on? The answer is supply and demand. Because if you are looking to buy an apartment in Cottesloe, they are usually, apart from one complex which we've completed selling, but most of the stock in Cottesloe is older stock, but built between the 60s through to the late 80s. And that stock is older, it is depreciated, and if you have a choice of buying that or something brand new in North Freo, Taskers, Claremont, by the railway, Subi or West, you want to buy something new. A lot of people will go for the newer product. However, the supply of that new product is everywhere. And what we're saying to people is, well, I can see why this salmon brick apartment with a creaky lift or no lift doesn't hold great attraction for you. But if you are buying something that has a location so close to the ocean, tennis clubs, golf clubs, great community facilities, green parklands, good social networks, it's got a very, very high amenity even though it's depreciated. So whilst it's a bit unloved, what I'm saying to people is this is actually a classic counter-cyclical opportunity to look at units in a suburb like Cottesloe when other people are looking at the new stuff with a 50-metre lap pool and all the bits and pieces. However, once bought, the new unit does go through a depreciation event and people start to realise that the strata costs are quite high. And that's the price you pay for new. And if you come back and start to look at an older product in Cottesloe, it starts to make some good sense. And that's just as taking a counter-cyclical view. The other thing you look at in terms of this market, everyone grew up knowing about the property clock, and the property clock at 12 on the property clock, it's a really great market, prices are up, everything's happening and everybody's spending money in the shops because they're worth a lot more. At 6 o'clock, it's the bottom of the market and things are tough, people aren't attending home opens, property returns and rents have gone down and vacancy rates are up. So where are we now? Well, in the last quarter of last year, coming back to Cottesloe as a bellwether, when we looked at our average rents across the portfolio, we noticed that the average rents were going up. We noticed that the vacancy rates were down. So there was demand in the market for properties. So what that means is, as the rents start to go up and the vacancies go down, we are getting a better return from our rental properties. That means we are past the half past. We are seeing a change. Now, that change was then confirmed by the REWA statistics in the first quarter of this year, which showed average rents up, number of times that a property is on the market for lease has fallen, vacancy rates gone down. So Cottesloe and the feedback we were getting, and sort of wider as well, Mozzie Park, Claremont, down to Nedlands, all that. So right across the portfolio, we were seeing recovery. Now, is this going to be sustainable? I think absolutely. Because also you've got people that are deciding, well, I don't want to buy another home just yet, I might just go and rent for a year. So we've got that sort of person coming to the market. I've seen people in their 80s and 90s not wanting to go into a retirement home, but saying, you know what, I'm just going to go and rent and I'm going to put the cash in the bank or give the kids some money. There's been a lot more people doing that. And that's not a bad strategy either. It makes sense. You don't always have to own your own home. So there's some really interesting things happening out there, but definitely, you know, I talked to a few valuers around town and they'll tell you that I think we're 25 to the hour on the property clock. I think we're about 27 minutes to the hour. I'm being a little bit conservative here, but who cares? The fact is we've just swung off the bottom, and housing in Cottesloe, if I go back to house sales in Cottesloe, what we've seen there is we've seen a recovery in that market, particularly in the median price downwards, so 2.3 downwards, and even, you know, activity right up to 3, and then top end of the market's had some good sales as well. So we're seeing these properties moving. We're seeing people deciding that, well, things seem to be improving a bit, or I've got lower interest rates now, so I'm not selling. And that's fine too, but it just restricts supply. So when we look out for Cottesloe for this spring-summer season, we are seeing reasonable availability in units, though the time to sell a unit now is reducing. So there's a little bit of activity there. We're seeing, we don't think there's going to be too many homes. I mean, there will be the normal, you know, death, divorce and taxes putting property onto the market. But we don't see any great increase in stock levels. So if somebody's thinking of selling a property and it's in a popular price band, it's likely to transact quite well. Again, I'm going to go back over this same 5-year period I was looking at before. In terms of the number of houses, back looking over Perth, there's 37% down in the number of transactions in houses and 46% down in units. So that is that evident in Cottesloe? Well, not quite, and that's where I come to the bellwether question again. But even if we look at this, the low point for transactions was actually 2017. Now 2017, well, I'll reverse it. Back in 2006 when the market was booming, there are 165,000 property transactions in the state of Western Australia. 165,000. Lots of property. 2017, just over 27,000 properties. Okay? That's structural. Now, it doesn't affect Cottesloe as much, but what it does say is that fewer properties are transacting. All right? Now, a lot of that is big, broad subdivision, new homes, new areas that have been bought out and released, and lots of members of the population moving because the jobs were no longer here. So the number of transactions actually over the last 13, 14 years has been quite a dramatic fall. It started to recover in 2018 and is continuing its recovery in 2019 despite the federal election being called and what went on there. So back to Cottesloe. The financial year 2019, 90 sales. That dropped about 19% from the full year in 16, but the reason that the drop is there is actually lack of supply. All right? So you can read it the other way, but the real reason is lack of supply, and that's important. And how do we know? Well, the median price has gone up. So it is lack of supply that's driving price. Average price growth of 7.8% in houses. In units, 42 sales in full year of 18-19. There's a drop of 25%. Median price of 811,000. Average price decline of 1.7. However, if you take out the new development at Overton Terraces, which was a bit of a one-off, you'll find that the median price for units is a lot lower and the average price decline is a lot higher. So one development of new apartments can change your stats. So again, you need to interpret what you're seeing there. Rentals in Cottesloe, there are over 300 properties leased. Median rent for a house was $868 a week. Units were $485 a week. Average rental growth up 15.7%. That's what I was talking about before. And Shellabears leased 18% of the Cottesloe market. So I'll just throw that in there. And there's a couple of our leasing experts, and Lukey, grand champion of Cottesloe last 3 years, Luke Langford, who's done a great job. So, 2019, we're really starting to look at what's happening. The equity requirements from the banks have been increased. You've got to be looking, depending on the asset and your circumstances, between 20 to 40% for a deposit. If you're going to borrow something and you're going to pay less of a deposit, you need more security from something or somewhere else. Interest rates are on the way down, as we know, and that's looking like it's a reasonably permanent move for a while. Banking reforms have changed the equity requirements. The federal election, like all elections that come along, are just a thorough pain in the backside for small business and particularly real estate agents, because what happens is everybody takes their eye off the ball and they all worry about things they have very little control over. And again, this leads to people wandering into a home open because they're lost on election day or something rather, and saying, oh, you see, you've got a house open. And you say, yes, well, I just do this for fun. But those a month or so leading up to elections are just a serious pain, and everybody goes off AWOL. Then you've got school holidays, you've got all sorts of stuff. And here's the interesting thing. When you talk to an agent and you are looking at timing for a property sale, it's all about the trade. I've told you about the property clock, where I think we are. Do not try and pick the market to be exactly what you want. It never works that way. If you want to get another property, and you want to downsize, you want to move, you want to upsize, you want to increase the size of the lot for your family, if you want to take some money off the table and give it to other members of your family, or put some into your super, whatever you're doing, the trade at the moment is what you should be talking about. So the opportunity is always going to be there. Don't think that you want to wait for the market to be better for your property so you can get more, because what you want to buy is going to go up as well. So you are the best judges of whether the timing is right. And the thing is, you trade on that same market. The thing I would say is, if you sell out of a good property and you are going to buy something of lesser value, be aware that there's a lot of people operating and looking to buy homes of lesser value. And because you've just put some cash in your pocket, other people have done the same. And what's really interesting about the Cottesloe market is properties that sold for $1 million during the boom are now selling for about 1.15 to 1.2. And people go, well, how can that be? Everything's gone down. Well, it's like that because a lot of the buyers have retreated to that area, got rid of a mortgage and bought for cash. So they're all operating in that 800,000 to 1.2 million range, and even now up to 1.5. And they're on the trade. If you want to get a really good bargain, go and look for an $8 million property and you'll get a discount. But that's really the way the market's working. It's a fascinating time. Of course, as a real estate agent, I think every time is a good time for a trade. But really sit down and talk to your agent and ask, well, if I do sell, what competes with me? And what I'm buying, what's the situation with that? What's the supply and demand? What's the outlook? What's the little things I should be looking for? And your agent should be able to tell you exactly what this means for your property. And everyone has a, be open about, it's like going for your housing doctor, if you like. Be open and talk about the things that you're actually trying to achieve. Because that perspective is so important to us in terms of the advice and being able to put you into a good position. The last 2 months, so getting into this new year, what are we seeing? 10 sales in Cottesloe in terms of housing ranging from 1.1 to 4 million. I say moderate activity in properties launched because we've got some properties where we're getting very good attendances and other properties where it's just not quite happening. That's probably seasonal, so nothing to get worried about, because a lot of people really start to look coming into springtime now and going through into summer. So we've seen an increase in Cottesloe owners requesting advice. We hope as agents that's going to lead to some business, and this decision's on hold here. What I mean by this is that a lot of property owners that may be selling are deciding, well, maybe we won't now. So that's one of the things that leads me to believe that we'll have a little restriction in supply over the coming summer months. And I can't see anything yet on the forward-looking dashboard in terms of who rings us for appraisals, how many properties we think are coming on, whatever new projects are happening. We can't see that changing. Cottesloe Market, 48 properties for sale, 400,000 to 4 million, not including Leffernew, so that's a bit of an outlier. Absolutely and fantastic property if you've got 16 to 17 million to spend. Average days on the market, housing is 64, units are 54. So units are just starting to sell a little bit better than houses. So when I talked about people starting to think about a bit of a counter-cyclical type of play, I think that could be happening. Cottesloe, looking to the future. This is always really interesting, but I want to again give some perspective. I've talked about the average age of people in Cottesloe falling. I've talked about changes in lots of different community buyer types, lots of people at different ages and stages. So with younger people and families moving into the area, there are requirements made on the infrastructure of Cottesloe, and people want a say in how their children are going to recreate and play and how they're going to contribute to the community, how they're going to socialise, all that sort of thing. And council policy has a part of that, as does the wider state government with their density targets, and then that also leads into development activity. Now, there is very little development activity in Cottesloe, and a lot of people say, well, we'd like the option of going into a new apartment, or we'd like to start a business along the front, we'd like to do something, but nothing seems to be happening. And I think that one of the reasons is the state government has an overarching planning policy. It's called Directions 31, and that's based on the fact that Perth will have a population of 3.5 million in 2031 by their projections. And because of that, the 6011 postcode, Petman Grove and Cottesloe, need to come up with another 1,281 dwellings in order to match what state planning wants. And so a lot of the locals here go, 1,281 dwellings? Are you kidding me? And I mean, I think it's possible, but is it desirable? And I think that the council and us as ratepayers and people that recreate in this suburb, we can actually say a bit more, and I'm actually really encouraged with certain developments that are starting to happen in the area. And I think one of the great things is you've had some talk recently, very recently, about a structure plan being proposed. And I think this is something as owners in the Cottesloe area that you need to keep an eye out for and really get involved in. So what's a structure plan? A structure plan is something that is encouraged by state planning, and a structure plan is where you can talk about your area and how you want it to look in 100 years' time, or 50 years' time. And it allows you to consider all things, which is the foreshore, the railway land, the village, the heart of Cottesloe, whether you want whether you want another retirement village or whether you want a development that suits retirement people but also is price equivalent for young families to move in and affordable. I think that's a desirable outcome, personally. And again, that creates a really good mix of people. So at the moment we have foreshore master plans, we have talks about ocean pools, which I know a little bit about. We have the Indiana tea rooms, and I see Taylor Swift has come in this week, come in swinging. So, you know, there's a lot of people interested in Cottesloe. But I think that it's very hard to get proper resolutions on foreshores and town centres and Indiana and the expansion of the Wern Hostel and the deaf site and the OBH and all that sort of thing if we don't have an overarching structure plan for Cottesloe. So as residents, you need to look out for the conversation and be involved. Lots of great people, lots of really active young families coming into the area, and I think there's an opportunity for a really good discussion to make Cottesloe, you know, a vibrant place for all people, and that's really the character of this area. So the market, it's what I call a cautious recovery. It's not going to get carried away, but there is a recovery underway, all right? It's not going to operate the same way as the last big upswing we had. The same factors are not there. So if you're looking for holding on because you want to get 30% rises in your property value, it's just not going to happen, all right? Properties are reasonably fully valued. There's a good opportunity to get a house sooner rather than later, I think, because of the supply issue. I think units are still a really good thing to buy in Cottesloe, something to do up and work with or add value to before you sell it. So this market cycle, cautious recovery, it's not going to be like it was before. The supply side is really going to determine everything that goes on here, and Cottesloe is a small market. Don't ever forget that. So local and state governments, they need to align with each other, and then we do that through the structure plan. The changing demographics will lead to a refreshing of Cottesloe, which is a good thing for Cott. See where the opportunities lie for you and your property. If you own an older unit, spend some money, renovate it, add some value. If you have a house and you want to downsize, it's as good a time to sell now. If you're looking to buy something that's a bit bigger, you should be very active, all right? Be part of the conversation for Cottesloe on that structure plan and design the future that you want. So, thank you very much, and you want to open for some questions? Yeah. So,